initiated after the Fed's decision last week, which intensified worries that aggressive interest rate increases could tip the US economy into recession. In this report, we aim to present the recent fundamental and economic news, releases that impacted the US stock markets, look ahead at the upcoming events that could affect their performance, and conclude with a technical analysis. Tesla, the innovative electric automobile manufacturer, was in the reds yesterday, closing the day near the 137 mark. Tesla's stock price is down by an astonishing minus 65% on a year-to-year basis, while its 52-week trading range is between 137 and 402. Yesterday it fell by more than minus 8%, reaching a new low for the year as growing discontent from some of Tesla's largest investors pointed out that Elon Musk appears distracted by his recent acquisition of Twitter. Leading to lack of leadership at the EV maker, Tesla's CEO defended his position by pointing out that the company's shares tanked because of a highly uncertain economic outlook, tarnished by high interest rates and persistent inflationary pressures, alongside supply chain disruptions and decreased demand for electric vehicles in China. More recently, the company offered discounts and other incentives in order to boost car sales in China to counter diminished interest. However, the demand outlook in China remains uncertain. Furthermore, target fix-ups to boost efficiency in both the Texas and the Berlin Gigafactories are currently underway, in attempts to safeguard any further shortfalls in supply chain disruptions, which were proven as positive news for the company. Furthermore, the recent step down of Elon Musk from his CEO position on Twitter after a poll on the social media platform is expected to free up more time for the billionaire, allowing him to focus on Tesla's governance. His words should be taken with a grain of salt, however, since Musk has a proven track record of not following up to his promises. Even though analysts foresee potential short-term weakness in Tesla share prices due to macroeconomic headwinds and diminished consumer demand, Cathie Wood, the CEO of ARK Investments, loaded up on cheap Tesla shares in Q4 according to Bloomberg data and bets that US sales could cover the slowdown in demand from Chinese consumers. Nike, the consumer discretionary giant, famous for its footwear and sports apparel, was in the greens yesterday, closing the day near the 103 mark. Nike remains in negative territory on a year-to-year basis, down by more than minus 37%, while its 52-week trading range is between 82 and 170. Yesterday, the company released its second quarter earnings report, with the results pointing out a beat in both revenue and EPS expectations, causing its share price to spike by more than 12% in today's pre-market trading. In regards to the figures released, the company exceeded revenue projections by $740 million in the second quarter and EPS beat forecast by 21 cents. The upbeat of revenue projections was aided by the blowout sales from Nike Direct Sales division, which were up by 16% for the period that brought in $5.4 billion. We also note that the Nike Digital Sales division rose by 25% on a quarter-on-quarter basis, reflecting robust consumer demand despite difficult economic conditions. Not all aspects of the report were positive. More specifically, the report pointed out that profit margins decreased by 3% for the period. This reduction in profit margins can be partly explained by increased production costs due to inflation pressures and energy expenses for production, driving goods prices higher. However, due to the oversized 43% buildup of inventories, mainly due to supply chain disruptions experienced in the previous year, the company may have been forced to sell the surplus inventory at a discount, leading to a reduction of the gross profit margin. Whatever the case, the buildup of problem of inventory still remains and may pose a threat to the profitability in the coming quarters. Overall, the retailer managed to outperform its competitors in terms of sales, but at the same time its share price appears slightly overvalued in comparison to the rest. Thank you for watching.